Hi, this is Ernest Rolfson, the CEO and founder of Finexio. Welcome to B2B Cash Flow Conversations, the podcast dedicated to sharing insights and innovations in business-to-business payments, working capital and cash flow management, and fintech entrepreneurship. In each episode, my guest and I tackle questions in the ever-evolving world of fintech and payments, an industry that's rapidly evolving and of great interest to investors and businesses alike. Looking forward to having this conversation. Today, we've got Dion Lyle, managing partner of 40 Grand and a thought leader in fintech for over 20 years. Dion recently merged his advisory firm, Fintech 25, with investment bank MJC Partners to launch 40 Grand, a consulting firm focused on driving value for community banks by delivering fintech-focused innovation. Dion, my man, welcome to the podcast.
Great to see you again, Ernest. It's nice to reconnect. It's been way too long. Love what you're doing at Finexio.
Absolutely. What vineyard do you have there in the background?
So it's funny. I have slatted doors and they look like they're moving on video, so I had to cover it. And that is just a random Sonoma County fall vineyard picture, just to prevent the moving slats on closet doors.
Lovely. I've known you now, I think, for almost 8 years or something. Someone I enjoy being around and chatting with so much, and that I haven't talked to you in several years.
Yeah, exactly. Well, you moved to Florida to get away from me, and I took that personal. So
that's right. That's right. But you're always a good time and have something very interesting to say. So I want to actually, before we get into what you're doing now, but why don't you share just kind of how you got involved in this payments space, and we'll hear about how you're a leader in it today, which you are. But always good to get some of the backstory.
Yeah, no, I appreciate that. I'm probably one of the few who came into payments and banking via information security. So I started in an obscure technology called PKI, private key infrastructure, very technical. And I was with a company that needed a vertical expert to get them deeper into banks. And so I looked at the technology and started to think about how to apply it for digital signatures on treasury, wire transfers, letters of credit, trade finance. And I became that expert just by attending SIBOS, AFP, and other bank events. You got to remember, Ernest, we didn't always have Money 2020 and Finovate to go to, right? We used to have to meet bankers, where they actually hung out, and there was no fintech back then. So I became a vertical expert around trade, treasury, and payments.
You started multiple startups and multiple consulting firms. You started Fintech 25, essentially to be the Rosetta Stone between banks and fintech startups. Banks really, as you know, have a challenge navigating this fintech arena. I guess tell us about that analogy, or what is this barrier that you and I know well, but perhaps others do not?
No, it's good. I stumbled upon the Rosetta Stone. I was doing a podcast at Money 2020 Europe with JP Nichols. And I happened to just blurt that out because my daughter had the Rosetta Stone. She was learning Hindi at the time and became fluent. So it works. But to that point,
she had the app.
Yes,
she had the app. Okay, she didn't have the actual.
Not the actual stone. Fair clarification on this. Exactly. So I stumbled upon the Rosetta Stone between banks and fintechs, and you and I both know we've dealt with the big banks. I'm one of the unusual people. I've been in big banks, Citibank,
right.
Data, biggest payments processor, and I've been in fintech startups, early employee, 8, 9, or 10, and a couple startups, some more successful than others. And I realized there was this huge language barrier. But not only language, but cadence, the way they operate, the way they look at things, the way they talk things, everything between these two worlds are like two giant gears that just couldn't mesh.
Right.
And I thought, but they need each other. And I never really bought into the fintech's going to eliminate banks. I never believed that narrative. And I'm glad to see most people now are past that. But I really wanted to be the Rosetta Stone, quite literally, between these two disparate worlds and help them work together to deliver better value for customers, whether they be B2B or B2C.
Well, what are some of the specific barriers to digital adoption that you've seen? Asking how you overcome them is probably too simple of a question, but maybe how have you helped navigate or overcome some of these things, and what are some of the most typical barriers that you're seeing?
Yeah, I think my favorite expression I heard a while back is culture eats technology for lunch, right?
Yeah.
It's always down to people, right? You and
Mhm.
I both know that. It's hard to get people to understand the value of technology and how it improves their work if they keep pushing back. I worked on a project in Italy a couple years back with a trade finance group, and we were doing this pretty complex blockchain trade finance letter of credit thing. And the ladies, they were all ladies who ran the letter of credit operation, kept holding back everything. Like, no, we're not going to tell you how we do that. No, we're not going to tell you how we do that. And when it turned out, they were afraid of being replaced before they could retire. They were all 50 something and they thought, look, I've worked for this big bank and I just want to retire as, some letter of credit person. And we never got them over the hurdle of understanding we were there to help make their job better. So now when I really look at things, I really start with the people and I really try to get them to understand we're here to help make your job better. We're not here to replace you. Digital is a tool for you to offer better service. I tell community banks all the time, personal service plus digital equals concierge service. That's what I want bankers to understand more than anything.
So at a lot of these places, well, particularly in the community bank space, they're coming in with a low tech, no tech environment to a large degree. Is that fair to say?
It's almost worse because what they come in with is we do whatever FIS Jack Henry tell us to do environment, which is actually worse because they're almost captive audience to that very narrow view of technology.
Absolutely. Well, congrats on forming 40 Grand. Tell us a bit about, that. What was the inspiration there, and I guess the value you're trying to bring to community banks with that formation? Is it more of the same? Is there some other element here around fintech oriented digital technology for banks?
Yes and no. So, I realized two things. One, after Ficheri 25, 3+ years, and onboarding with the mega banks was the hardest part of that job. The actual work was fantastic once you were onboarded. I hated the onboarding.
Yeah.
Community banks don't have that issue. And I met Mike and Carlton, my partners in 40 Grand. They run MJC Partners, an investment bank for community banks. And what they're doing is they're in the boardroom talking merger, acquisition, divestiture, subordinated debt, really great high level financial stuff. And they kept getting, well, what about fintech? What should we do? Like, some banks are still air quoting fintech or digital or technology.
Right.
And these are banks between, call it 250, 300 million and 5 billion. They don't have a CDO, chief digital officer, certainly don't have a CTO, nor should they. And their IT team is literally a guy or gal with a USB token going around updating Windows on laptops and notebooks, like very low tech footprint to your point. And we realized this is an opportunity to help these banks add value to their footprint with digital, right? And so rather than work with the large banks, I really brought to 40 Grand this focus on let's help these banks get digitally fit. They don't need to digitally transform. They don't need a giant PwC, Accenture program.
So it's
right?
not the digital transformation, change the whole back office, go to the cloud. Everything is upside down.
Exactly. I even wrote a blog about this. Digital transformation is too big to succeed.
Right.
And in a magazine called Digital Transformation, they said 80% of all digital transformations fail. I'm like, sure. That's like car and driver saying it sucks to drive a car. Like, that's a horrible way to look at digital transformation. And yet that's the reality, which is why I always talk about one process at a time. Get digitally fit in onboarding, get digitally fit in loan origination, right?
I understand. So it's almost like driving up the value for them by being more laser focused and bringing in, I don't want to say a point solution, but a purpose-built solution for the specific bank pain point. I mean, is that?
Yeah, it's funny you say that. I always avoid saying point solution for that reason, because I don't want them to think too narrow, but also I don't want them to think boil the ocean wide. It's about fixing a process, a method, getting your customers engaged digitally as well as the personal service that community banks rightfully take a lot of pride on.
What's the benefit here to the end user, to the corporates, to the CFOs, and how much would you say the banks think about that? And I'd love to hear too, how do you view engaging with you and engaging with fintech more broadly, you're one of the whisperers in the industry. How does that help impact the bank as well, ultimately? So I'm
Yeah.
curious to
So
see how much you think about the end user and or your customers, these banks think about that. That'd be interesting to how does
yeah,
that play into things?
fair question. I'd like to say all they're obsessed with is their end user experience, but they have
Yeah.
board of directors, they have profit margins that they have to meet and all of that. But I will say this: community banks think a lot about their small business customers. They really feel connected to them. And I think
Mhm.
this period of time, this pandemic has shown us the value of local, the value of our local business. I know I've started to shop at a local market instead of the Whole Foods. I have a local, don't judge me, liquor store. It is pandemic time. So I have a local liquor store, Z's Liquors, that I pay
We're
a
only
little
going
bit
to
more.
judge
But
you if you're at the liquor store 8 times a week. Otherwise,
okay,
we're
it's
not. Yeah.
far less
Otherwise,
than
you're in a
that.
judgment. Otherwise, you're in a judgment-free zone.
Perfect. Good to
Yeah.
hear. But this
Yeah.
guy's great. And I go in and he's like, "Hey, Dion, how you doing? Hey, you asked about
You have a
tequila the other day.
yeah. You have a
Got some cool
relationship.
stuff."
You have a
Exactly.
relationship.
And
So
this
you
is what
see it as
community banks do.
the banks are investing more in the relationship.
Yes, they are. Particularly, most of the banks I work with, talk to, see, evaluate the SMB. They really want to find that perfect balance. And their ideal customer is high net worth plus SMB,
Right.
$1 million net worth, and they have a $2 to $3 million local business. That's just sweet spot. But those customers are now demanding digital. It's no longer enough to go into the bank, shake hands, say, "Hey, Mike, how's your business? Good to hear. What do you
They
need?"
want more
Right now,
digital. The customers want more digital tools.
that's right.
And the bank is driving a balance between making these customers happy and, to your point, they're not running a charity. They're running a bank, and
Yeah,
they're
that's
trying to
right.
drive for profit margin as well here.
That's right.
So that's the driver. To summarize this element here, it's really not about cost takeout, is what I'm hearing. For at least, I
Uh,
mean, that may drive some of it. You talked about some efficiency, but it really
yeah,
is, it sounds like investing in growth, investing in capability, investing in customer retention,
that's right.
satisfaction, less about I'm trying to save a nickel and cut some headcount here. Although I think you were going to say something there
Well,
about
it
that.
is. So they have something they call efficiency ratio, which I kind of like, which is just we want to grow the business but maintain FTEs. I've not met anyone who says I want to get rid of anyone. It's mainly
Right.
about I've got 48 FTEs, full-time employees. I just want to make them more efficient. I want to go from being a $500 million institution to an $800 million institution by
Okay.
not adding anyone. Well, the only way you fill that gap is digital.
We'll keep talking about this. I wanted to say, is there a unique way you have to work with these smaller banks? And as I understood it, you've got a few different frameworks, the paid framework, the fast framework, in terms of driving innovation with folks.
Yeah.
Is there something unique that you found is working with these types of institutions that need to engage in a unique way in this area?
Yeah, so I tell them, I said, listen, you're a great bank. You've done a lot of good stuff. You don't have a chief digital officer. Digital is one of the most important things now. I am your outsourced chief digital officer. All things digital, I'm going to
Mhm.
give you evaluation, recommendation, and architecture and help you build that digital footprint that you need. The paid framework, I actually built that for larger institutions, but it works perfectly here. And that's parallel, agile, innovation, delivery. And the key is parallel. I work in parallel with the bank. I'm outside pushing the project. You're inside being a banker, doing bank stuff. And it's agile, it's fast, it's responsive, but it's innovation delivery. Because one of the things I really started consulting to avoid is innovation theater, right? We've all seen the innovation theater. Oh, this is such a great project, blah, blah, blah. Never gets to market. I'm not interested in that. I want to deliver. Now, the fast, the flexible, autonomous, specific, timely architecture, that's unique to community banks. And really, this is a statement that I want you to break away from FIS and Jack Henry's roadmap,
Yeah.
not rip and replace their services or their system, but just break away and hollow the core, build some services
Mhm.
around that, and
Yeah.
then later decide if you want to rip
Yes.
and replace.
Yes, we're starting to work with banks now ourselves. You might have seen Bank of California invested here recently, so we're working with those folks. There's a number of other banks we're talking to that have come to us, and they're like, we love what you're doing. We love your digital tools around accounts payable. We want to offer more of these capabilities to our customers. We would love to do more of this off of our own rails or integrate in our own products, or, hey, we have an idea. We want to bring in real-time payments. How can you support that? And it's kind of like, well, what do your core providers provide you? What tools and services do you have to be able to expose to a fintech to make it easy? And let's talk about what the time frame is and what the constraints are. And you share that with these guys, and they're kind of like scratching their heads, and they haven't really considered that and know how to leverage that. So
it's funny you say that. I'll build on that. So I got an RFI from the bank for a new rip and replace core. All the check boxes, wires, ACH, blah, 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 just check box. I said, this is great. Who are you sending it to? Jack Henry, FIS, DCI. I said, well, what about a cloud BaaS provider, banking as a service? They're like, Dion, we wouldn't know who to send it to. We don't know what we don't know. So fair enough. That's exactly what 40 grand is designed to do, is fill in that gap.
I think it is pretty hard to find out what new things are there, right? Especially if in your banker world, you can go to those conferences. Do you see the banks wanting to or needing to do the bleeding edge? Or I guess, what's the maturity level of the types of solutions you can bring in that are even palatable? Because it feels like, and I'm in this camp, so I don't want to speak for you, but the FIS's, Jack Henrys of the world are not probably the best place that these folks need to be looking for if they really want to do something that is, 2021 standard, that's really going to have, if they really want to maximize delight, it's not going to be with those big players at all.
I can tell you, you're spot on, Ernest. The fact is, if you think of the classic McKinsey 3 horizon, 1, 2, and 3, call it 12, 18, 24, 36 months, whatever.
Right.
The fact is, most of them are here. They're horizon 1, maybe horizon 2, maybe. A couple surprise areas that I've heard from bankers, they're not looking at blockchain. They wouldn't even know what to think about it, right?
No.
But back to your point about the conferences, do you know what the number one conference is for community bankers? It is called AOBA, Acquire or Be Acquired. That is their number one. That is their annual conference that they all live to go to. Now think about what that says about community banks. Live or die. I mean, that's where these banks are. They need this help to prevent being on the bottom of that food chain when the AOBA conference happens. They want to be the top of that food chain, right? And to your point, FIS, Jack Henry, all lovely people, blah, 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 all that. But those people are not going to help you get out of horizon 1 to 2. They're not even at horizon 1 yet.
No.
So I really try to help them see that they're perfectly, keep your core, keep working with it, hollow it, work around it. And that sounds like what you're talking to your banks about as well. So
I think it's the only path that makes, the path you're recommending is the only path that really makes any sense, to be honest, which is
exactly
what else would you do? The only other thing is rip and replace the whole thing, which is not palatable for a lot of these folks.
It's funny. You look at CEOs of the banks I'm talking to, and there's a bell curve. There are some absolutely older bankers, forward looking, ready to make changes. And there are some that are like, you know what? I'm 5 years from retirement. I don't want to be responsible for a rip and replace that goes badly. Wide bell curve there. But what I am finding is the middle of the bell curve is where they really need the help. They're really open to it, but they're not quite sure how to make it happen. Those are the folks that I get most excited about. Those are the opportunities I enjoy.
What are the areas that they're in the most need of? Call it modernization, or the areas where they're in the most pain right now?
It's the basics. It's digital onboarding. It's onboarding, actually just onboarding, loan origination, treasury services. Their stack is it's a wire system.
It's a disaster.
You've seen it. I know you've seen this. And it is a matter of just getting them to understand there are tools out there. And to your point, you're spot on. I had a banker said, "Hey, I'm going to Finovate." I said, "Great." When he got back, he's like, "I don't know what to say. I'm overwhelmed." There was so much there. Like, I don't even know how to put this into perspective.
Okay. Which is where you would fit in. But
I would hope that I could help them make sense of that. Absolutely.
I guess that's really interesting. So how do you go about identifying what the right solutions are, the right partners to bring in? And what do you look for? Or is it completely Do you have a couple of key vendor relationships that you feel like you can rely on bringing to customers, given that some of these areas tend to repeat themselves? Or how do you think about that?
Yeah, really what I start with, and I've added this to the paid process, is at the front end, a gap analysis. Here's where you are, here's the bank you want to be. What's that gap? And then stack order those to say, well, onboarding, look, that's where the relationship starts. You got to improve onboarding. Let's digitize onboarding first. Second, let's look at your treasury stack. What are you offering now? Well, that's woefully insufficient. What's next? And then prioritizing that. But the other step that I've added, honestly, is a process audit. The number of banks where I've sat with their wire person or their lending team or whatever the case may be, said, well, you have 48 steps here. Why is that? Well, we've always done it that way. I'm like, no, you're not allowed to say you've always done it that way. What is this step? What is this step? And when you break down the process, it's amazing how many banks, 10-year-old process, never questioned it. And I can't imagine, Ernest, in our line in fintech world, no one's going to accept a process for 10 years with no changes or even auditing and asking the question.
Not if you're at a real startup or real.
Exactly.
Yeah.
Exactly.
Yeah.
It's all about efficiency.
So they don't even stop to ask the question, essentially.
Exactly. Because they're busy running the bank. I get it. And I was talking to a bank the other day. The bank started to assign these tasks to people in the bank. And I'm like, well, what about their day job? They already had an 8-hour, 10-hour a day job. How are you going to handle that? Are you?
Sure. Well, it's just, it's everything's, when you're at the top, let's say, everything seems easy. Oh, you can't fit that in too? Oh, you can't do that as well? What, you know what I mean? It's not realistic.
Yeah.
And
exactly.
So it's the same thing. Like what we tell, our solution is about digitizing accounts payable payments. And well, you could have your staff do this themselves, but you've got to onboard like 2,000 vendors to pay. And so your staff could just, I guess, pick up the phone and do that. But when do they have time to do that? Aren't they employed doing something for you already? And then are they trained to do that? Would someone on your team have the competency and training to be able to have a thorough negotiated conversation around a number of electronic payment options for someone? Cost, speed, security, efficiency, and be able to navigate and complete enrollment around that.
That's right.
Why are you asking somebody to do that?
Yeah. An operations person is not your best innovation driver, right? Operations people are very good at rinse and repeat events, right? And look at the statistics. I wish I'd pulled this up. The number of accounting finance departments that don't close at the end of the month, end of the quarter because they're behind, it's most of them. Right? And why? Because they're using Excel, they're using outdated tools. The bank information is not coming in cleanly. It's not scrubbed data. There's no data hygiene, all of this stuff. And to you and I, we're like, well, why would you do that? We've always done it that way is the answer. Wrong answer. Let's stop the hamster wheel, address that, and give you tools so that it's not a horrible end of the month, end of the quarter.
I think two areas around this I wanted to kind of tease out. I guess, what have you seen having the biggest impact on your customers on these banks so far, or even in the last 3 years, let's say? And you've been engaged in this space for, forever. So you've got a lot of war stories, but I guess what is making a big impact and or accelerating the impact? And would love to hear too, if anything, to your knowledge, impact on the end customers and users, and if so, what is that, or what do you think that might be?
It's pretty basic, and I often talk to bankers about data, and they say, yeah, okay, I hear big data, data lake, data warehouse. I don't even know what all that means. I know what data is. I said, data to me is you enter it once and it's done, right? And what most people don't realize is the number of times they enter data and re-enter data. I sat with a wire transfer person where she took a PDF of a wire request and keyed it all in. I'm like, oh, no. Where did wire request from? Why is that data entered here and again, and then confirmed via phone? Nightmare, right? So my thing is, that's the number one thing. If you think of data as enter once, use many, that would solve a huge percentage of what I'm seeing as the biggest efficiency problem. And they're just used to it. This woman, lovely woman, doing a great job, had no idea.
And I'm sure she rarely makes mistakes.
I agree. Rarely in wire transfers isn't enough. Like that's got to be 5 nines. Like you can have never.
I get it.
Right? Right? I mean, yeah, you're in the payments. You know that. I mean, these wire transfers.
I'm thinking
are
of
super
Gattaca, cool, movie. I don't know. Maybe that was 2001, right? Where you've got rooms of people, right? And you're taking drugs and you're bioengineered so you never have a bad keystroke and whatever. And that's, people are like, well, why did something go wrong in payments? So you mean that one payment was screwed up? And it's like, well, at these banks, they don't actually have robots working for them at these banks.
Yeah.
These wires it's actually people.
Yeah.
And maybe 1.5% of the time something will get screwed up.
Well, look at Citibank.
Right?
Remember the Citibank one that just a short time ago, $500 million.
Oops. They were like, yeah. So we accidentally sent you $500 million.
Just send it back.
Yeah, if you could just send that back, that'd be awesome. And yeah, awkward.
Did you read about it? So I wrote a blog about it.
I remember. Well, it was for that bond payment. If you remember, I think it was a bond payment, and they ended up not getting some of the money back, right? Or they ended up holding it in escrow for months.
Most of the money did not come back. Yeah. Now everyone says, "Oh, they lost it." No, but what they did was they hold garbage bonds for a decade at a loss rate, and they lost. And we'll come back to working capital. They lost the ability to use that working capital, and 3 people had to sign off on that transaction. 2 of those were not employees. Here's a process question for you. How do you allow a $500 million process to be signed off by 2 non-employees of Citibank using a system? And I looked at the screenshots, Ernest, guys like us, oh my God, this stuff was from the 80s. It had to be COBOL based.
Green screen nonsense. Yeah.
Really nonsense.
Yeah.
But now look at a community bank. That's Citibank. They have billions in IT budget, and this has happened. Now let's go to our friends at the community bank. What do they do?
Oh, it's the worst, if not same. It's just on a smaller scale. There's less room for idiocy.
I mean, that's smaller scale, same issues. That's it.
Yeah. So are the smaller banks okay with, I don't know, perhaps ceding some control of some of these things to, let's say, third parties, and or relying on things that they didn't build themselves or these new processes? Because I think on one hand, the bank may say, oh, but we've got a tighter control on this because Wanda is the one that's looking at it, eyeballing, entering it in.
Honestly, it's a bell curve. I meet banks like that, but most of them are in the middle of this. Like, we get it. We know we're dated. We're antiquated. Work with us on our budget and our time scale so that we can break out of that. And just like when I used to sell to big banks like Discover, Citi, and others, you find that champion. You find somebody that gets it and wants to make the change.
How are they thinking about technology and IT and risk and mitigation around that and bringing new solutions to customers? And we're certainly white labeled by different folks. I'm sure some of the banks you're working with are just straight up turnkey adopting different tools that are out there. Is this a stumbling block, or banks, especially these smaller banks, are they more flexible and loose around this? Or are they thinking about it in a way that's pragmatic and can make it work? Or they are banks after all, so they are heavily regulated and have certain compliance things that they're unable to be flexible on. But I guess what are they being flexible on? What has been creatively adopted to make things work, given the
I've not had any pushback on the outsource. Yeah, the outsource thing is no pushback because they've been outsourcing their core to Jack Henry, FIS, and others for decades, right? So the outsource question, unlike the big shops, never been an issue.
Okay.
The compliance piece is just a matter of they want to get in there and really see how it works and what are the touch points and where can they influence it and that type of thing. But as far as like the actual outsource and all of that, not an issue. A little pushback on the cloud, but that's just lack of knowledge. They just don't understand it. But that part's not been the issue.
Are they concerned about them and their safety or their compliance, and to what extent is it more that they care about their customers, the CFOs that they're working with in those businesses, or is it both, or is that nuance not?
You know what? I will say this about community banks. I find they talk about their customers, both retail and mainly B2B, much more than the big banks did. It's much more about our customers need this. Our customers asked us this. We need to deliver this to our customers. I will say I enjoy that change going from the big shops to the community banks. They're much more, our service matters, our reputation matters. This is everything to us. Our customers' happiness matters.
And we're talking about the big boys. We're talking about like the top 5 biggest banks, right? They just, is the blanket statement. I think people would agree, care less about service, care less about customers, and more like what commodity thing can we push out there?
It's quarterly results, right? It's all about, look, when you're Citi, when you're B of A, when you're JP Morgan, they all do a okay job. I was opening my own personal, so I switched Ficheri's bank account over, and I opened with a big bank to remain nameless. And I went into the bank and they said, oh, the banker's out for the afternoon. The teller offered to help me, filled out all the paperwork, opened the account, all good, went home, got a text, you have to come back. Oh, I missed some. Come back. Banker sat down with me. She did the exact same questions as the teller did. And I said, this is weird. I said, I'm having deja vu. Why is this? She said, oh, because you did it with a teller, not with me, the banker. And I said, that sounds like a you problem, not a me problem. You had all the information. You just want to follow your process for your purposes so that you, the banker, protects your job. I was actually kind of really disappointed. It was about their process, not my outcome. And you could feel it. You could tell. That's exactly what happened.
Yeah. No, they don't care about your time. Obviously.
Exactly. I'm a small business person, and they're going to have me come all the way back into the bank to redo what I had done because the person who did it correctly, thank you, person, isn't the person according to their process, their flow chart.
Yeah.
Shouldn't it be the outcome, right? Not the process, the outcome.
Yeah.
It was compliant. We didn't break any compliance rules.
Sure.
And yet they made me redo it all.
Sure. No, I get it. Let's talk about what else you're finding interesting and what's happening around fintech and payments. And I think this is highly related to both what I'm doing and what you're doing. But you're writing a lot. You're blogging about cash flow and cash flow management solutions around that. You recently wrote something about AP automation and B2B payments. You touched on it. It wasn't your first, but I think it was in your top 3 areas that you were kind of helping these banks navigate with, was around the need for more robust digital treasury solutions. So what's going on with this whole treasury, cash flow, working capital management, B2B payments space? How are these banks thinking about this? What are you interested in about this or exciting about it? Or what are you promoting or pushing any, maybe narratives that these banks should be thinking about navigating, given I think competition is kind of heating up, or anyway, investment interest and capability interest at a minimum is heating up.
No,
it's an underinvested area, right?
Right. The first thing I discovered was I had mentioned to a banker, I said, oh, there are programs, and I worked on a project at First Data. We failed, full disclosure. We were trying to get our SMBs to give us their data and process it and make recommendations, all that, for a variety of reasons, failed. But I mentioned this to a banker. He's like, oh my God, I could actually see my customers' QuickBooks, pull it in, analyze it, and make predictions in the future. I said, yeah, that is now doable.
It's not that hard.
Oh my God. It's not even rocket science. But if you're used to going out to your customer site with a notebook and taking notes, coming back to the office type, this is literally what they do. But they like that. They like that personal service. And what I'm telling them is you can do that.
You can be both.
That person. Exactly. That's it. How much better would you be as a banker if you had your customers' 90 days of QuickBooks or even a year of QuickBooks data fed right into your systems, analyze and say, hey, you know what, Bob, your business is up and to the right. You should get another truck for your electrician business. Let's do a working capital loan that gets you that truck. Those trucks are $100,000. They're not cheap. Let's do this. And here's how you can pay for it. Here's the kind of loan we could get you. This guy was like, what? That's possible? I'm like, it's not even hard. This is basic stuff, right? And they were just blown away. Don't know what you don't know, right? That's the theme that I'm finding with community bankers. They want to do the right thing. They're trying to, but they're using very manual, very personal methods instead of digital plus personal to deliver concierge. They're starting to wake up to that. And that's what excites me. Those are the kind of things that I love.
I think the education here is digital tools enable more rich personal interactions and actual
Exactly.
more meaningful customer engagement and better and more accurate advice,
That's
right?
right. That's
Especially on the
right.
predictive side, leveraging trends and analytics.
That's right.
You do not need AI or machine learning to get to the core of what a $10 million business needs to be successful, or one of these couple $1 billion banks and below.
That's exactly. I
You
always
just
tell
need
the
the
example.
basics.
It's the basics. I rent in Marin, and I moved here a little while ago. Decided to look
You're
for
still in
next.
Marin, right? Not
Yep.
to give
Yep. Love it.
your location away. We'll be
That's okay.
silent on the town.
Yes, but Marin's lovely. But I rent, and my bank offers me refi all the time, and I'm like, I don't own. You can see I don't have a mortgage payment every month. You don't need an AI bot from Stanford University running on a crazy supercomputer to go, hey, this guy writes a check to a person every month for this amount and clearly doesn't have a mortgage. You know what? Let's stop offering him refi. Let's offer him something else. And yet that basic knowledge, that context, bankers miss all the time, whether it's B2B, B2C, doesn't matter. Bankers miss this all the time. And you and I know the tools are available. All you got to do is look at the data. And this is why I say, back to the first point, data is available. Just look at it, get comfortable with it.
They don't, I mean, and again, they don't have the tools in place to get access
That's
to
right.
these systems.
That's right.
Is the problem,
That's right.
right? It's like everything is a 6-month integration.
Yep.
Everything is difficult. Everything's a project, as you know.
I'm working on a project now with the bank where they're trying to get some FIS data out of their system, and they're struggling with it. I'm like, it's your data.
Is there more to talk about that trend, or there's some other trends
Just data.
here? Or...
What I would say to community bankers is, let's start with a data structure, a data strategy, a data schema. Let's just get the data hygiene going. And from there, you're going to see all these possibilities open up. So that's one of the first things is gap analysis, followed by process audit, followed by a data strategy. Then everything's possible.
You gave some really interesting examples. And the banks we talk to want to increase non-interest income and
yes,
right, and generate that. That's a big driver. Is that a big driver for the customers you're engaging with? And or do you see, I think this is kind of what I'm formulating, what I'm seeing is, yeah, net interest income, all well and good. They'd love to have new alternative sources or additional sources of revenue. But at the end of the day, if you can put the bank closer to doing more bankery stuff with the client and or giving them the data, to your point, to let them better make a loan, they're really happy. They really like that because that is really what they know best. I think it's like they say they want more fee income and they want to be able to help customers with that. But at the end of the day, don't they just want a closer relationship to be able to make more loans and make sure they don't lose those deposits?
100%. I mean, you're spot on. Growing deposits is one of the keys. And the one way they look at it, and I'm trying to help them understand the nuance of this, is they think, oh, digital allows me to go out of my geographic area. Therefore, deposits grow because I have a bigger geographic area. Well, with 4,800 and something banks plus credit unions in North America, there's not a lot of geography uncovered. I think there are companies who look at it now, well, maybe you need to do a niche or a vertical or this or that.
So it's
But
not
to your
about
point,
geography.
it's not. It just get closer to your customers, stickier services, better services.
Yeah.
And by the way, I mean, there's so much that small businesses spend. They spend tens to hundreds of thousands a year on all these small business services, bookkeeping, invoicing, accounts payable, receivable, factoring, all the stuff that you're a specialist in.
Yep.
And yet these banks sit there and go, oh, like, no,
we don't do any of that.
Yeah, exactly. And yet there's a study from FIS, oddly, and PACE that shows SMBs would love their banks to offer these services.
Nice.
I saw data that showed 66% of SMBs don't believe their bank understands their business.
They don't.
Why? Because they don't look at the data. They don't look at anything beyond, hey, Bob, let's handshake, have lunch, smoke a cigar, whatever, golf, but businesses move beyond that. It's digital now, right? On Deck can get you that loan like boom, digital, online, no friction. Banks have to learn that digital playbook, not giving up the personal. I think the personal is hugely important. And I think they get that, but how to implement it, they get nervous.
really, you're pointing out something it goes up really into the middle market as well, where I live. Although again, some of these banking partners I have do serve small businesses. I certainly have very large channel partners that are dealing with small businesses or have a gamut. If you've got thousands of customers, there's going to be some smaller businesses in there, and smaller businesses need payments and working capital management as much as
Yes.
anybody else. But it's you raise a really thing, is that like if you're a CFO and you need help in and around financial services, the first call is probably not to your bank these days.
Isn't that amazing?
It's not to your bank. You're on the Google and you're looking
Yep.
for some software thing, and it's some subscription,
Yep.
or you're looking at your accounting system, or maybe you've adopted accounts payable software, or to your point, On Deck is now providing, right, or platforms like that are providing loans. And so you would agree with the statement or this general theme that the bank is basically at risk of being disintermediated?
Yeah. Now, the funny thing about a lot of the banks I talk to, they go, "Oh, I don't care about, Shopify or Amazon or Square Capital. Those are the loans I don't care about. All I care about is the $1
Okay.
million loans."
Okay.
Well, there's a great quote from Ernest Hemingway, a book that he wrote, where a character says, "How did you go bankrupt? Slowly at first, then all of a sudden." What these banks don't realize, you let these guys, the big tech, eat the edge of your business, and suddenly your box is much smaller and you're less important. And that stickiness and that relationship deteriorates every time you let the edge of that box get smaller. What I'm encouraging is, no, be more integrated to your business customers, not just for the big loans, because that's where the profit is. Be there when they need you. What is a bank? But if not, George Bailey, classic, It's a Wonderful Life. It's the banker that's there when you need them, right?
That's the way it used to be.
Yeah, I think it can be. I really do.
Yeah. So what's next for you in this industry? What are the plans for 40 grand? What are some of the other trends you're seeing where do you think community banking as a whole is going? Give us some, future state. Where's the world headed?
So I'm pretty excited. So I work with the folks at Money 2020, and they let me do a community bank workshop on Sunday as the event opens. And so I've got some folks coming
in October. This October,
live in Las Vegas. It's going to be great.
Sweet.
I'm excited to be back to it, right? And we're going to have somebody from the Clearinghouse talk about how community banks can do RTP. I'm going to talk with a Modus Box, the founder of Modus Box, David Wexler. We're going to talk about how banks can evaluate a new BaaS platform in the cloud, right? Mm-hmm. We're going to have somebody from NYDIG, Tammy Bangs, who knows community banks really well, talk about how they can do Bitcoin, digital assets. Community banks can do this with NYDIG, right? And we're going to have this whole agenda the morning from 10 to like 12:30 of just how community banks can do more digital. Nimbus is going to present and a couple others. And I'm really excited about that because I think this is the first step to getting community banks welcome in the Money 2020 community and environment, getting them to understand technology is not scary, digital, lean into it. I was at Move, MOOV, the crew out there, went to their dev conference in Denver 2 weeks ago. Fantastic. There were only 4 bankers there. 4. It's a fintech dev conference, 4 bankers there. Now, maybe they're intimidated because I was in a session, they pulled up code on the screen and I was over the tips of my skis.
Yeah, that's not ideal.
Well, for me, it's not. But what I liked about the conference in general was this focus that, and Angela Strange of A16Z opened it with, developers are going to develop the future. Let's work with them. Let's not be afraid of that. The final thing that I'm really excited about, honestly, of course, AI, ML, data, blah, 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 low code, no code systems. I think they have a ton of potential for community banks. Get a business analyst who gets really good at a low code, no code platform and begin to redo your process, right? And then you can update it regularly. Everyone can buy into it. It can be more of a team sport instead of just delivering this technology that no one understands.
So like process automation style, back end business, machine to human to machine interactions.
Exactly.
Third-party integrations.
I use Monday.com for everything. It's a no-code platform. And I'm not a coder. I coded in college in BASIC and COBOL to show you how old I am. And then I just decided I'm not a coder. But I have the business mind. I like the business analysis. I like the process. Monday.com allows me to manage my own day-to-day business very easily with no code. There are platforms more sophisticated than Monday that a bank could use to deliver these automations between departments, between customers and back office, and that type of thing. That I'm really excited.
I just wanted to ask, would it be okay if bigger banks engage and attended that community banking event at Money 2020?
Absolutely.
Would it be relevant for them? What is the unique element right now about community banks that we have to engage with them in a different way?
Honestly, their lack of knowledge.
Yeah.
No, you bring up a good point. I mean, it's absolutely relevant for any banker who's not yet doing digital assets, doing RTP, looking at BaaS as a service. It's relevant for any and all of them. What also it's good for is just getting the dialogue of fintech to bank, Rosetta Stone, get them talking, get them understanding the other side of the aisle. I think that's really key.
That makes sense. Well, any parting thoughts here before we wrap up, or anything we didn't touch on that we really should have? Or
we should probably do another one in the near future. You and I have a lot to cover on.
We should probably talk more than once every 4 years or something.
Yeah, let's make a note of that. Yeah, let's talk working capital next time, and kind of what Finexio is doing and how you help mid-tier businesses deliver on that. Because a lot of the banks I talk to, they focus on SMBs, but they go up to the mid-tier. SMBs grow up.
No, that's what we're helping them. I mean, the banks that we're working with right now is they serve the range of customers, and we're working with more the bigger side of the small side, if that makes sense. We're not working with the mini ones. And we do have investors that are invested in on the board of a number of community banks. So we are able to gain and have dialogue around some of these insights that you've been sharing. And the good news is, I think, what we hear from our investors and that are sit on these bank boards is similar to what you're sharing in some of these challenges. Yeah. So always good to be validating and talking through these topics with smart people. If they have a 15% of their business is with some larger clients, they want to keep those larger clients. They want to serve those larger clients. They want a more robust tool set. They want better, digital modern tools, improve the consumer experience, because they're concerned that maybe there's a path of graduation away from the community bank to a Chase, to a Wells, to a Bank of America. Right. And they're like, hey, I don't offer accounts payable payments as a service. I don't offer working capital management. I don't have digital reporting that someone is kind of showing them over here, right? And so it's almost that bells and whistles component that you want to be relevant to everybody, but the bank can't be doing a custom build out to have something that's going to serve all these. Some of these customer needs are a little bit different, and the big banks can get more away with it, and the bigger banks can have dedicated teams and resources and dev and products for all different types and sizes of customers. You can at a larger community bank or multi-billion bank.
Personal matters, but digital can be the difference maker. And so I encourage community banks, again, here's your personal service. You're known for it. It's great. Here's digital. Here's concierge service. Keep working on that spectrum to deliver that better touch.
Again, Dion, thank you so much. This was a convo at Dion Lyle at 40 grand. Look, man, always fun. This was great. I learned a lot. Hopefully the audience learned a lot, got something of interest from it. I know I did. Let's sit down if we can, grab a coffee or something at Money 2020. I will be out there as well. It'll be good to reconnect with you sincerely. We'll have a good time. Just as we did now. Maybe we'll have better. Thank you so much, man. All right. Be well. Thanks for listening to B2B Cash Flow Conversations. This is Ernest Rolfson, the CEO and founder of Finexio. I welcome your questions and comments. You can reach me at podcast@finexio.com. You can also find us on Twitter at Finexio Payments. To subscribe, you can go to finexio.com/podcast. Be sure to check out my new episodes on Apple Podcasts, Spotify, or wherever else you listen to podcasts. Thanks, and talk with you again soon.